Hello and welcome to the Business Standard Morning Show. I'm Thirumoy Banerjee, and here's a look at the stories for the day. Microsoft CEO Satya Nadella was on a 4-day India tour last week, and just before him, Alphabet CEO Sundar Pichai was in the country. Heads of two tech giants were all praised for India and the digital push. But their visit comes at a time when India is tightening its regulatory grip on tech giants. Why then are the tech giants still trying to woo India? Devargya Sanyal looks behind the high profile visits and greets.
Microsoft CEO Satya Nadella said last week, "We want to be the infrastructure provider. We want to be the developer amplifier. We want to provide every part of our tech stack to basically help the country gain that leverage towards becoming a $1 trillion digital economy soon." Nadella seems to have ticked all the right boxes during his just concluded visit to India. After External Affairs Minister S. Jaishankar, he also met Prime Minister Narendra Modi on Saturday evening. He praised the government's focus on sustainable and inclusive economic growth led by digital transformation. The Microsoft CEO also said that he was looking forward to helping realize the Digital India vision and be a light for the world. Earlier, during an interaction with the Business Daily, Nadella hailed India's use of technology as a percentage of its GDP. He said that Aadhaar and unified payments interface platforms were astonishing and that AI will be the next big wave. Nadella said that it is about making in India for the world. This is India's moment to shine, he said. Just a few days ago, Alphabet CEO Sundar Pichai had also echoed similar sentiments during his visit to India. He said that India is emerging as a big sphere for technology and will soon become a big export economy. Both the CEOs, besides being two of the most recognizable Indian origin heads of global tech majors, showed a common enthusiasm for working with the Indian government in its push for digitization and technical skill development. However, even as two CEOs were touring India, the government was busy giving final touches to regulations governing tech giants. According to reports, the government is also mulling bringing a new law to police the big tech. It wants to put in place a regulatory framework to ensure fair competitive practices and a level playing field for both the big techs and the small firms. This will be in addition to several other existing and upcoming regulations. While periodic regulatory scrutiny, antitrust and privacy-related lawsuits against tech giants like Google, Meta and Apple are becoming increasingly frequent, the year 2022 saw an unprecedented push from the Indian government to put in place a comprehensive regulatory framework for IT and telecom. This includes the Telecom Bill, the Digital India Act, as well as the Digital Personal Data Protection or DPDP Bill. The National Company Law Appellate Tribunal, NCLAT, last week directed Google to pay 10% of the 1,337 crore rupees penalty imposed by the Competition Commission of India. Even as regulatory news tightens, what are the different factors that make India an attractive destination for the big techs?
Especially after the pandemic and the rise of digital initiatives within most of the enterprises across the country, including those who are very shy off in the technology adoption, has given rise to that untapped market, which was never approachable for these big techs. So as it is, the addressable market, given the India's wide diversity, was huge. But then some of the other sectors, such as SMBs and the MSMEs, these two sectors have also added on to the overall addressable market, which provides a very attractive proposition, especially in the area of cloud technologies, the artificial intelligence, and particularly anything else which is quite banked upon the data. The adoption within the Indian enterprises, and especially in certain sectors such as manufacturing, retail, healthcare, Some of these sectors which have prominently grown post-pandemic, where the consumerism is very high, and especially where the disposable income is quite high as well, that has become the booming reason for most of the big tech companies to continue to invest.
India also provides a great opportunity for consumer experimentation.
So today, if you look at both Google and Microsoft, or even other tech giants of the globe, they are trying to pivot from being a techno company to a consumer experience company. Because for the future growth perspectives, you have to focus on the consumer experience. And for the consumers, now India is considered as the biggest ground for consumer experimentation, because the kind of diversity we have, the kind of technology know-how people have, puts forward humongous possibility of future growth. India is the best, laboratory for them. The kind of test experience OpenAI can get by, inviting users from India. So, success of any AI-driven technology, if it is benchmarked in India, it can have global success, because India would train that AI technology on various parameters, because there is a diversity in each and every aspect, or on each and every variable that you talked about.
With its diversified consumer base and skilled labor force, India is also well positioned to become a trusted global tech arena under China Plus One strategy.
The core Western markets which were served are going through probably a recessionary come inflationary phase, right? So India stands out as a potentially alternate attractive market. I think that would be the first point. The second is India also has a significant capability, talent capability. While we know that unfortunately there have been big tech layoffs globally, I would believe in the medium term, there would be certain hiring in the offshore centers in India, providing the technology development, technology upkeeps, etc., from the Indian supply side. So both from a demand side, in short, both from a demand side and a supply side, I think India is becoming more and more attractive.
But is there a possibility that India's tough regulatory stance may discourage or arrest the big tech's enthusiastic foray into the market? Not necessarily, says Johari.
The reason that motivated them to consider India to be a manufacturing location was not only because of the talent or the workforce in the manufacturing sector, which is the labor arbitrage, but also their willingness to continue to capture the market as the regulatory outlook evolves in the country. I don't think so. It has proven to be an impediment for big techs to consider India as a less secure or less safer region to operate in. That's the reason we have seen the likes of Twitter, the likes of WhatsApp, the likes of Amazon and Microsoft complying to the requirements of government. There could have been an iota of that these actions were impediment for the big techs to grow in the region, they wouldn't have continued the investment.
Malodia also believes the regulatory push is part of the larger evolutionary life cycle of tech innovations, and these won't be detrimental to tech giants.
Yes, there are issues like breach of privacy. There are issues with blockchain technology that we have been talking about, and that's where government, when they find that there is some misuse of technology, they try to do post facto regulation, but that I believe is not a hindrance. It always happens in this way. First, there's a technology innovation, evolution, and then people try to redeem the technology in multiple ways. Most of the times, such redemption is for the betterment of humankind. And sometimes there are people who try to misuse it, and that's where regulations have to come in. So yes, there would always be cases of corrections, but I don't think that in India there are any regulations which are detrimental to innovation.
Sudarshan of Deloitte believes that India's regulatory push might actually be encouraging for the tech giants' long-term plans.
In the medium to long term, it is perhaps very good because it provides a very clear framework the regulatory, including the data privacy bills that we are talking about now, in every form. I think it will provide a clear framework and a defined field of play, right? I think the better defined it is much easier for a company to operate once it knows the rules. So in a sense, this is welcome. I know in the short run, there may be certain difficulties that companies will have to overcome.
While the regulations might seem discouraging to certain aspects of the big tech's operations in India, the size of the market India offers, as well as the opportunity available in terms of skilled labor, diversification, and consumer experience, means that the big techs will have to comply with India's regulatory framework in order to capture this market.
In another big development last week, BCCI invited bids for ownership of 5 women's IPL teams. It is scheduled to start from the first week of March 2023. But can the women's IPL match the popularity and success of the men's IPL? Tushar Verma brings you the answer.
The T20 Indian Premier League is going to be double the fun this year, with women cricket stars like Harmanpreet Kaur and Smriti Mandhana taking the field even before their male counterparts. With 5 teams participating, the Women's IPL or WIPL is scheduled from March this year before the men's T20 tournament. It will be held right after the Women's T20 World Cup in South Africa, scheduled in February 2023. With prominent women cricket players from India and around the world, will the inaugural edition of the tournament have the spark needed to build a dedicated fan base and ecosystem for the sport?
I think the women's IPL should be looked at in the way that the men's IPL, is seen like they are separate products in that sense. But what the women's IPL will do for women's sport is give it greater visibility on television platforms. There'll be a regularity of seeing these players and of having favorites. And we saw the crowd response when the Indians and the Australians played white ball series in Mumbai recently. So, the women's IPL will just amplify this kind of enthusiasm for women's sports.
IPL's viewership in 2008 was 102 million. It touched 426 million in 2022, an increase of more than 400%. In comparison, the Women's ICC T20 World Cup at its inception in 2009 garnered TV viewership of around 1 million. In 2020, the viewership of the Women's T20 World Cup between India and Australia touched 20 million in India, according to telecast partner Star Network. Despite the sharp jump, experts believe women's sports viewership still has a long way to go. So, what will it take for the women's tournament to find the right valuation, revenue, and profitability?
So, if you look at the sports industry, we are talking about 10,000 crores. I mean, that's a big number, right? And out of that, 90% is cricket dominating. Maybe 3 to 4% of this is something where women's cricket can become in terms of size. Again, there are constraints. I think a lot of effort needs to be put in here in terms of branding, awareness, campaigns. A sport is something, which takes a lot of time to basically build in any country. So I think that is the thing here. So women's cricket also that way is like a very new proposition. Thankfully, cricket is something, which is well accepted, but, women's cricket is something which is new. So I think we'll have to promote that very aggressively, build a proper ecosystem, get the cricketers, women cricketers to actually tie up with multiple brands.
In a previous episode of Business Standard Morning Show on IPL's valuation, we highlighted the big numbers associated with the sale of media rights for IPL for 5 years. The rights were bought for a total of $6.2 billion, placing IPL second among all sports leagues in the world on a per-match cost ranking. The auction for media rights of WIPL is likely to take place in the coming months. At least 10 entities, including Viacom 18 and Disney, which bought the rights for IPL, have shown interest for WIPL rights.
My simple guess is that, if you look at the IPL, men's IPL, we're talking of 10,000 crores annually in terms of media rights. Okay, I think women's IPL is planning to start, as per media reports, with almost 25 to 30 matches. So the number of matches are actually becoming, 1/3 or 1/4 as compared to what the men's matches are. So on a per match basis, if we take that number, we'll have to kind of reduce this, for this IPL. So 10,000 crore media rights annually become 2,500 crore, right? Now, broadly, women's IPL can be a fraction, maybe 3 or 4% of this 2,500 crores in my view. The good news here is cricket is something, which is the highest watch sport in terms of viewership, both on TV and digital. The second good news is that the current IPL men's teams are the ones who are going to buy out the women's team. So there is already a branding, which is already being created.
Reports suggest that at least 5 existing IPL teams, Chennai Super Kings, Rajasthan Royals, Delhi Capitals, Punjab Kings, and Kolkata Knight Riders have expressed interest to own and operate a WIPL team. Speaking to an English daily, CSK CEO Kashi Vishwanathan said his franchise is keen to promote women's cricket and having a women's team will make CSK look good. But unlike the e-auction for IPL, WIPL auction will be closed room bidding. Reports stating unnamed sources said the BCCI has not set a base price for sale of teams. The decision is expected to keep investors across the spectrum to show interest and minimize potential losses. Women's sports league are garnering popularity across the world. In Australia, the Women's Big Bash League or WBBL is gathering hype. It's a domestic T20 cricket championship which Australia plans to expand. Experts believe the increasing popularity will help women cricketers around the world while also tapping into the sport's commercial potential.
The women's IPL will help cricketers, not just Indians, but I think women cricketers around the world. England and Australia's attempts earlier are fantastic because and it's a result of a sustained campaign to promote women's cricket. The women's IPL will, I think, it'll change the financial dynamic that's operating in women's cricket. You suddenly hear of women doing courses with reference to being umpires, referees, and doing data analysis, scorers. So that entire economy around women's cricket, it will get a massive knock-on effect that'll come when the women's IPL takes place, and it'll almost its success will run away with the potential and the capacity that the women's game possesses.
While there is a growing interest in the women's IPL tournament, it will call for plenty of player endorsements, awareness campaigns, and marketing to come at par with men's IPL. While this tournament will be judged on its revenue and sustainability, it will also act as a platform for women cricketers in India to showcase their talent and build a fan base.
Moving on, the equity markets have welcomed 2023 on a weak note as foreign outflows and a stern tone of the US Fed led to the year's first weekly loss for equities. Going ahead, which factors will decide Dalal Street's action? What do technical charts suggest? Rex Kano answers in our next report. Equity markets closed the first week of 2023 on shaky grounds as fears of recession and prolonged period of higher interest rates weighed on investor sentiment. The Sensex benchmark slipped below 60,000 on Friday to a low of 59,670 and eventually settled with a weekly loss of 941 points or 1.6%, while the Nifty 50 index fell 1.4% for the week. In the broader markets, the BSE mid-cap and small-cap indices fell by up to 0.6%. Sectorally, IT, banking and metal stocks buckled the most while FMCG shares defied the weak trend. The BSE IT index declined 2.3% followed by a 1.7% slide in the BankX. The metal index was down almost 1%. The FMCG index, on the other hand, finished with a gain of 0.4%. Analysts have attributed the recent weakness to sustained selling by foreign investors amid valuation worries. According to VK Vijay Kumar of Geojit Financial, the major drag on the market now is the sustained selling by FIIs, which have sold stocks more than 11,400 crore rupees in the last 10 sessions. China and Europe, which underperformed in 2022, are doing well as FII money is chasing lower valuations by selling in overvalued markets like India. Apart from global markets and foreign flow trends, Q3 corporate earnings, crude oil movement and inflation data will keep investors busy this week. IT major TCS will start the Q3 results session today. followed by HCL Technologies, Infosys, Wipro, and HDFC Bank later in the week. Crude oil prices will also sway investor mood after the commodity slumped up to 10% in the first few sessions last week. An extended weakness in crude will be cheered by the street. Lastly, CPI inflation data in India and the US will be closely tracked on Thursday. As per a trading economics forecast, India's inflation is expected to have nudged a tad higher to 6% in December from 5.88% the month before. Besides, the manufacturing and industrial output data for November will also be on the radar this week. Technically, the Nifty index has witnessed a negative crossover on the daily chart with its 20-day moving average falling below the 50-day moving average, which is seen as negative. On Friday, the index also ended below the 100-day moving average support placed at 17,900.
The 17,900 is a crucial level to be watched out on the Nifty in the near term. Sustained trade below 17,900 can trigger a slide to 17,300 level. On the upside, the Nifty is likely to face considerable resistance in the zone of 18,200 to 18,350. Meanwhile, this week the Sensex can swing in a broad range of 58,800 to 60,900.
The reforms ushered in the early 1990s rejuvenated the country's economy and the financial markets. There has been no looking back since then. It also dealt a big blow to red tapeism, but traces of it can still be spotted here and there. Like if you want to open a restaurant in Delhi, you will still need to fill at least 28 types of documents. But that is about to change. And not just this, restaurants in Delhi can now remain open post-midnight. In our Decoded segment, we take a look at the new policy which seeks to spruce up Delhi's nightlife.
A cursory glance at the list of documents needed to open a restaurant in Delhi may be enough to force anyone to rethink the plan. VAT registration, weight and measures license, water bill, electricity bill, registration under Shops and Establishment Act, DPCC capital investment affidavit, location map, proof of allotment of plot, EPF registration proof, music license are a few of them. And over 2,000 applications filed in 2021 to open restaurants are still waiting to see the light of the day. The backlog from 2022 is no less. Probably this was the reason that the economic survey for 2019-20 had said that obtaining a gun license was easier than getting a license to open a restaurant. But it is going to change now. Under the new trade licensing policy, which will come into force January 26th this year, an applicant will get their license within 49 days. Earlier, there was no cutoff date. And if agencies fail to give the license during this period, the license will be deemed as granted. The timings of restaurants are also being relaxed. All 5-star and 4-star restaurants, hotels will be allowed to function round the clock. Restaurants inside the airport, ISBT premises, and railway stations can also remain open 24/7. All 3-star hotels can operate till 2 a.m. and eateries in other categories can stay open till 1 a.m. Also for 4-star and 5-star hotels, the cap of only one restaurant getting the permission to run the bar is taken away. Now with the payment of license fee, hotels can have multiple bars in the hotel premise. Lieutenant Governor of Delhi, V.K. Saxena, took the initiative and brought together all 4 involved agencies, MCD, Delhi Police, Delhi Fire Services and DPCC, to make the licensing process easy. Earlier, the local police stations used to verify the character and previous conduct of the applicant before granting the license. Now the police verification will be completely online and a police clearance certificate will be issued by the special branch of Delhi Police. And for new licenses, there will be a fee of 1,000 rupees which has to be deposited at the time of application submission. And just before the civic body polls, Delhi's civic body too had relaxed the rules and allowed the use of open spaces and terraces in restaurants. Even though the move will ensure that people who come out at night will have places to eat and drink. Safety remains a concern in parts of Delhi during night. But without a doubt, hotels and restaurants staying open after midnight will bring more revenue.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
The Economic Survey of 2019-20 had highlighted that the services sector was facing several regulatory hurdles even for routine businesses. So Delhi's trade licensing policy is indeed a welcome step. That's all for today. For more news and analysis, please log into business-standard.com. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.